Greetings in the name of the Most High Yah. It's King Yediah, aka King Solomon, staying wise in life and in these markets. And right now I'm in a live trade on Gbpusd. But let's start off with the US dollar. So the US dollar right now is at a support level, right? So you see we're creating this let's see what time frame am I on? Let me go up to like, okay. Let's go to the 4-hour chart, right? So we could break this down nice. Alright, so that's good enough right there. So let's move this across. So this is my 50% fib level right here, and we're getting the bounce off of that. Had this nice support right here. Let me pull out the arrow. No, let me just do this. Right, so we had this wick support coming here. Now we're creating another wick support right there, right around the 50% level, and it coincides with this level right here, right, and also this level. So we're kind of bouncing off the volume that was created in this level right here, right? And this is kind of what I'm expecting, because the US dollar, they're gonna raise interest rates and stuff like that, and with the US dollar anticipating higher interest rates, you would expect that, you know, the US dollar is gonna just skyrocket, right? But this is the thing. Anytime something looks obvious, right, like interest rates are gonna raise, and let me see if I could take off some of this stuff here, because I know people get really confused with my charts having a lot of stuff on it. So let's clear that up for the masses. Alright, take off all of this. Even take off the camera levels, right? Just leave the fib lines, right? So this is the thing about trading. This is what I've noticed, right? When things look obvious, the market makers have to do something that's contrary to it, right? Because that kind of gives the ebb and flow of the market, right? If things like, when you're using technical analysis, anything that looks too good to be true, they'll probably spoof that a little bit. They'll probably offset it a little bit, because there's too many people recognizing the opportunity, right? So if it's a bullish run on the US dollar, interest rates are rising, right? We're expecting to go higher, right? But with so many people taking so many positions, they need to bring it back down. They need to come and retest these levels here. And the reason for that is they need to clear out some of these longs. These people who are packing up into one side of the market, you're creating too much of an imbalance. So they need to get short start coming in and saying, yeah, we're gonna short the US dollar, we're gonna short the US dollar, it's coming back, it's pulling back. And when you entice people like that, then you create on this level right here, right? You create a bunch of stop losses that will actually drive the market higher, right? So when we start recovering, we're gonna get a nice little rally right here that's gonna be able to give it enough power to break through the highs, right? Especially when interest rates is coming up. I think this week they're gonna raise interest rates again. That's when you're gonna get this boom back up, right? So right now it's a little calm, nothing crazy is going on, you're just getting some support here, right? But when we break this level here and we start hitting these stop losses, oh man, it's gonna be fireworks, right? So with that said, let's where we at? All right, where's Gbpusd? All right, so that's the 5-minute chart. Let's go up to the 4 hour, and we could work our way down from there. Right, so we're back up at these levels right here on Gbpusd, which is just the inverse of the US dollar chart, right? So we're back at back up at these levels here where you could catch some nice shorts, right? Let's clear this up again for the masses who have clean charts, you know. Let's clear it up for these guys, the clean chart enthusiasts. Let's clear it up for them, right? All right, so we're back up at these levels right here, you know, nice levels to go short, right? All this resistance right here. So boom, what did I do? I took the short, right? Because we're coming back up to these beautiful levels to catch the short. Stop loss is right above at 1.21260, and you know, we're just looking to catch back, to come back to these lows, you know what I'm saying? And as the US dollar pops up, we're gonna get these pullbacks, right? So it's pulling back nicely right now. This is a nice kind of almost engulfing candle, right? Nice pullback candle, and we're in profit here. This is like a 1.1 lot size, so I'm so confident with this trade that I'm taking a bigger kind of size with this trade, you know what I'm saying? So this is, to me, this is a simple 1 2 3, man. And as the interest rates is coming out this week, I would love to hold this like a swing trade, but before I kind of I closed out my positions before, because I didn't like how it was pushing up in the Asian session open on Sunday. I didn't really like the price action, so I was like, you know what, let me just secure some profits, right? And we push back up all the way up here and stuff like that. So I think it was a good decision, because I get to re-enter right at, you know, some of the places where I actually shorted before. So I secured some profit, and I'm back in the same trade like if I was like if I never left, you know what I'm saying? So I think it was a very good decision. And let's see what this does today. I'm thinking maybe I want to break even this trade, because again, if too many people are recognizing this chart pattern right here, the amount of shorts that, or the selling that's going to come in, it might just encourage the market makers to just, you know, push price back up a little bit, you know what I'm saying? And that can hit your stop. So I have to make that decision later on. Let's see how the day progresses, you know what I'm saying? Alright, y'all, it's King Yediya, aka King Solomon, staying wise in life and in these markets, and y'all trade safe and stay blessed.